All right, good afternoon, everyone. Today is December 12th, 2011. It's 12/12/2011. I'm going to go through a few trades here. We didn't take that many this morning. I actually got two break-evens, so you can see my net for the day is 0. Some of the members took a point when they could. Some of the partners took a point when they could. One of the partners took 2 points when he just let it run. Anyway, I was considering doing that in the last trade that I took, but I didn't. All right, so here's what we had. We started the day out here. The market was down. We had a huge gap down. We had like an 18-point gap down, and we were looking to go short here on pullback to the BBC. This was the bubble, but it didn't pull back far enough. Then we didn't put in a lower swing, so we had to wait until we got over here. We tried to go short again over here, but we couldn't. Right there, there's a space. We needed a lower swing again. Finally, we had the opportunity to go short. I actually got into this one a little bit late. I got in over here. I didn't see it when it was happening over here. But this was the bubble, and this was the first touch of the BBC, the first pullback to the BBC from that bubble. I didn't see the trade actually trigger because I was doing something else. I was looking into the chart or something. So I actually entered it over here, and I got in one tick better than the entry over here, so I got in at 31. Now, as one of the partners pointed out this morning, that worked against me because I moved my stop to break even once I had 1 point in the trade. Had I gotten in at 0.75, at 30.75, I never would have had 1 point in the trade, so I never would have moved my stop to break even. And I would have had my 2 points from that because you can see it did go down the full 2 points. Then we were looking for lower swings. We couldn't trade this pullback right here on a fresh bubble because we had this area right in there. All right, we got to pull back to the BBC, but we couldn't trade anything. We were looking for a lower swing after that. The market looked like it was attempting to move up here. I think the 2100 tick actually had a bullish cross here, but we were saying everything else was suggesting it's just going sideways, so we stayed out of it until it got over here. We had a lower swing. This is a George trade. The BBC was still inside the box. We traded the BBC on a limit order at 27.5. It went against us 1.5. It went, pretty well against us there. Looks like a point and 3/4 almost. And then the trades started coming back in our favor. Once we got up, it was right at the, this was our break period right in here. And once it got a point profit in the trade, I moved my stop to break even, and it took me out of break even again, right before dropping down another 7 points. And that was my morning trading. Now let me show you how it all looked on the other time frames. Over here on the 10,000 contract, we had our bearish cross in the pre-market, and our first pullback was over here in the pre-market. So we never had an opportunity to trade the first pullback until right here. And right here is the same time that I traded on the 4-tick range. Okay, so that right there, the first pullback on the 10K was also the same trade I took on the 4-tick range. The trade that Dwayne took over here on the YM was also the same time that I took that trade on the 4-tick range. So we had it going on all three of these time frames. We had the same type of trade, a short from the BBC going on all at once. I'll show you the 2100 tick. We had the same trade right here on the 2100 tick, except the cycle had not gone down below the 50 yet. So on the 2100, this wasn't a trade yet. It was just at the BBC. You see how much it penetrated the BBC right there before it came back down. But that obviously worked out in favor of the trade. The 2100 may have a trade right now, but it's going into a weekly trading zone. If I scroll back enough here, you'll see we had, let me bring this up so you can see the time on this. This was in the pre-market. We had a bearish cross, and we were looking for the first pullback to the BBC after the bearish cross. We got that over here, but by the time we got it, the cycle was headed up pretty strong. So we weren't really looking for, we weren't really sure what the market was going to do here. Okay, we were thinking the market may be going up here, and the cycle was headed up pretty strong against the trade, so we were just waiting. We're sitting on our hands and waiting. Again, over here, we couldn't take the trade on the short side. The only time we could take the trade, well, was right in here when it pulled back up right here, but we didn't take that one. We did take that one at the end right here, but that wasn't actually even a valid one over here by the cycle. Okay, And that was pretty much it. There were some things I'll point out here on the 6E. Just a second, let me grab it. All right. Now with the 6E trade this morning, a couple of the partners, or maybe even a couple folks in trial, had asked about the setup on the 6E. What we look for is divergence, and then the first pullback to the BBC after divergence, as long as it's on the proper side of the elbow. Okay. So the elbow's broken down here. We're looking for shorts. We had divergence over here. We're looking for the first pullback to the BBC, which is right in there. All right. It happened again, and this I think is the one that happened in the live trading room this morning. We had divergence right here. This was the first pullback to the BBC. I know Robert, one of our partners, took this trade right here for 8 ticks. We had bullish divergence here, but we're on the wrong side of the elbow for bullish divergence. We had bearish divergence here, and this was the first pullback. So it's that trade right there is struggling right now. But I would expect if it gets above here, it'll keep going up. But if it drops below that BBC, that thing should drop. Well, that's the European markets. It's the 6E, and they closed lower. I wouldn't be trading the 6E right now. But let's see over here on the back to the ES. On the 4-tick range, we're right inside a zone here, so we don't have any trades setting up here. We're right below a zone on the YM. This was the optimal trade right here. Any follow-ups after that are okay. This one being right at the zone, the BBC right at the zone with bearish divergence. Pretty high probability trade if you would have taken it at 118.89. Let's jump to one other market. Let me grab it here. If I can. I can't find it. Oh, here it is. George on the 2100 at 1048. Okay, I'll show that in a minute. All right, this is the Russell 2000. It's been pretty choppy. It's a 10-tick range on the Russell 2000. From the pre-market, there was nice opportunity, but after the pre-market, once the markets opened up, there was like one chance here and one chance over here. Though this one here I wouldn't have done with the cycle going the way that it is. Right over here would have been a possibility, and it's been pretty choppy ever since then. All right, that's the Russell 2000 on a 10-tick range. Now you can also trade the Russell just like we did with the 6E. All right, and George said to look at the 2100 at 1048. Let me just look at that. 2100 at 1048. Yeah, it got really choppy in here. This pullback right here. You mean? Right here. No, that's 34, 42, 48. I'm not sure what time zone. But anyway, the bullish one. Okay, yeah, there was a bullish cross here, but this is where I said the market, everything was saying the market was going to be going sideways, and so we did not jump into this. We did have the bullish cross right over here at 1047, 1048. We weren't looking to go long right in here because everything else was looking weak. That's why I had said that. I didn't show it on the 2100. I did say that the 2100 had a bullish cross here. And that was when we had the elbow moved up over here, I believe. Right? The elbow moved up. Is that right? Yeah. No, that's not the right time frame. It was earlier. Over here is when the elbow had moved up. Okay. But we never got a trade over here on the 4-tick range. So if the trade, if you don't even get a George trade on the 4-tick range, like if you don't even get one of your trades on the 4-tick range where you get 3 ticks outside the box, then the chances of it working over here are pretty slim. So we didn't take that one. We let that one go. And I think Mike said he was going to let that one go too. Technically, did it qualify? It did. Technically. Because the cycle was above the 50. And we pulled away from and back down here. Okay. Now, if you did take this, and this is in the workshop, the recording of the workshop. If you did take this and you saw that the MA1 was holding the trade in right here, Now there was opportunity to exit the trade when the MA1 was holding it after you got all these bars right here. Unable to close above the MA1. So the entry would have been here at 28.5, and when it couldn't get above 29 here, it couldn't close above 29. That was opportunity to get out of it if you did get into it. Okay. And right now, let's see. We're not doing anything here because we're going right into the zone, but the YM was the best looking trade right here. When I said at the beginning, from 118.88.89 right there, 118.89 I think is what I said. Out of these markets right here, the YM was the best looking trade right there, and that was the window of opportunity from there to the MA1. It's at the MA1 now, so if you did take the trade, you might want to reduce risk, maybe take some profit. Look for a close down below the MA1 for the trade to continue. Okay, that is the morning recap.